Hi, it's Kevin Markarian with Marker Real Estate, and the United States just banned all oil imports from Russia. People reach out to me asking my thoughts and how this is going to impact the housing market. So here's my feedback. This kind of actually reminds me of a time in the late 70s and early 80s, which I wasn't around at that time. I was born in 1980, so I was very young. But it reminds me of the oil embargo, the OPEC oil embargo that took place in the late 70s, early 80s. And if you look at what happened after that took place in the early 80s, there was major increase of interest rates, as high as 18% interest rates in the early 80s. I only know this because I had friends and colleagues when I first got into the industry in 2002 that told me that they remember those days and so on. That took place right after the oil embargo with the Middle East and OPEC. And so this is kind of similar to that, because I'm pretty sure we're heavily reliant on oil from Russia and so on. So this is like going to make a big impact on the economy here and like gas prices and so on. We've already seen the increase in gas prices over the last year or so, and I think that the result of this will continue to increase inflation. The gas prices are going to be even higher. Some of the things that we're seeing out there, I've heard like $12 a gallon and so on. But I think, in terms of the real estate market, I think there's one reason why the market will stay the same. It's actually going to get even more crazy in terms of home prices going up even more. And first, there's a lot of things related to that, but most importantly is that the decision makers with regards to interest rates have a major responsibility to act carefully. And they've actually, the Fed, I even said, maybe it was 2-3 weeks ago, a month ago, or maybe sooner, where they were planning on doing some interest rate increases, but they've already said that they're not going to do that because of what's happening in Ukraine and so on with the economy and the world and everything. So the main reason, though, why the responsibility is there for these decision makers is because of 2008. 2008, we're still feeling the pain of the housing crash. We're coming out of it, really. I mean, if you look at this historically, like 200 years from now, they're going to be saying like, 9/11, then the housing crash, COVID, and then, right. So we're still kind of feeling the pain of that 2008 crash. We're coming out of it, and then the market's, the housing market's really strong. But with that said, I don't think that there's going to be a repeat of what happened in the 80s with OPEC. I don't see there being a major housing crash. As a matter of fact, I think their housing prices are going to continue to skyrocket. There are going to be even greater price increases because the cost of goods will be going up significantly, right? So it's not just like gas prices, right? It's everything prices, because the cost of shipping things now. You're going to ship something from across the world. There's already these challenges with shipment because of COVID. It's slowing things down. And so this is going to be directly related to that now. So not only do you have these shipment problems, but you're going to have now cost of shipment problems. It's a compounding impact, right? So what does that mean to home prices? What does that mean to the real estate market? That means that the cost of goods are going to go up, because to ship them now is going to be even more expensive than what it's been. So now the cost of a sink, that you buy from Home Depot, the parts for that sink, you have to get those parts from China or wherever you get them from. So the cost to get those parts here was going to go up. So that means now your cost to repair a house is going to go up. The cost of gas, of course, is going to go up. So those contractors that you need to hire to fix up your home, they're going to charge you more, right? And the cost of everything, like parts, goods, the roofing materials, the materials themselves, the labor costs, right? Because of travel and so forth, is going to go up. The labor costs that are going to go up because they're spending more money to buy things. They're spending more money, so then they need to increase their prices. And what that means is that, therefore, that the impact, the correlation there is going to be that home prices will continue to go up because the cost of goods will go up, and also because interest rates are going to stay low, right? So we have to continue to push through low interest rates, higher cost of goods. So cheap money and higher cost means more money being put out into the marketplace, which will mean then, therefore, home prices will increase. And couple that with the housing shortage already in place. You know, John, now you look around the country and we're experiencing the same thing that I had experienced in San Francisco and even in the Central Valley of California since my beginning of my career, which is multiple offers on every single house almost, right? So that's happening across the country now. And so what happens when you have 10 offers on one house or 12 or 15? I've seen, you know, I've seen 100 offers on a house before, okay? So what happens when there's like 60 offers on one house, 40 offers on one house, 30 offers on one house? Okay, well, there's 50 people that want to buy that house, but only one of them can buy it. So that means there's 49 other people now that are out there in the market that are looking for something to buy. And so do you think they're going to be more determined or less determined? They're going to be probably more determined, right? So then therefore you have that emotional impact that's going to create the already existing frenzy of increased home prices. Then you have the cost of goods that are going up because of the shipment costs and the less cost of oil and so on. And then you have, like, you know, gas prices, and you have labor. So what I'm predicting is 100% the home prices are going to continue to go up. Inflation is going to impact that. So what I recommend is buy as many things as you can buy, own things, because the cost of those things are going to go up. I mean, just even with, you know, I own a bunch of old muscle cars. I mean, those prices of those cars have gone up significantly since just, you know, in the last year. So anything that you own, not to mention, you know, property, those things, the cost of those things are going to go up. So those agents who are concerned about the market, don't be concerned. Be concerned more with your skills to improve your skills, because in this situation, the strong get stronger. And those of us that need to improve our skills, we need to really step up our game because it's going to become even more competitive. So improve your skills. And we're also doing some coaching, and then actually I hate that phrase coaching, but more so just kind of doing some classes on how to generate seller leads, how to generate more clients. If you know anything about some of the things I've been doing, you know, we're right now doing anywhere from 60 to 80 leads an hour. So I'm going to be sharing how to do that, how you can grow your business as well. If you're into like generating a lot of leads, we're going to do some classes on that. Also, if you're into like growing a team, we're going to, you know, I've done that for many, many years. I'm going to be sharing that. So there should be something where you can register to learn more, and go ahead and do that, and you know, reach out to me or go ahead and click to register. And you can get into some of those classes so you can learn how to not only survive in this market, but thrive. And, you know, every time people ask me, hey, like, you must be doing great right now. The market's so strong. Yeah, I mean, I'm doing great, but there's a lot of people not doing great because there's no inventory, and you don't know, you know, you can't help your buyers or you can't help your clients get into houses because there's no inventory. So there's strategy on how you can create more opportunity for your buyers, and at the same time generate more seller leads so that you can go out there and sell more houses, because we know, you know, right now sellers have the advantage. If you can get listings, that's where it's at. So just go ahead, you know, register for more information, learn more. But, you know, again, going back to the housing market, going to be another strong year. Home prices are going to be higher than ever, and you know, demand is going to be higher than ever. Lending is going to be even more aggressive. You'll have different kinds of loan programs. So don't be alarmed about this oil ban. And let's say I'm wrong. If I'm wrong, that's an even better opportunity, because then if the market comes down, then you have 2009 all over again, right? So 2008 was a big crash, and then I had my very best year up until that point in 2009. I've had better years since then, but up until 2009 was my best year. So there's different buyers, different clients, different people for different markets. So just be aware, be ready, and be prepared for when the time comes to make adjustments, just that way you can survive. I've been through so many different ups and downs, like through 9/11, market crash in 2008, through all the ups and downs that happened after that, through COVID, and now, you know, maybe this. I don't think this is going to be like a huge thing. Hopefully we don't go into World War III. Unless that happens, then it will be a huge thing. But I'm hoping that you know, greater minds or smarter people, you know, sharp people are going to prevail here and do the right thing. And things will be okay. But just be ready, prepare yourself, and go ahead and click, register, learn more. I'd love to learn from you, connect with you, and see what you're up to as well. All right, you guys have a great day. Take care.